Come closer to you, right? I can come closer to you.
Yeah, that's a picking, huh? Okay. Sorry, but we don't have more time for questions because we ran out of time. So I would like now to invite the next speaker, Maria Lewis Kussmaul. She is the co-founder and the partner of AGC Partners. Maria brings with her over 30 years of experience in the investment and in investment banking and the venture capital industry. In addition, Maria was participating as advisor for 73 startups in the last 10 years. Please welcome Maria.
Thank you, so as Mom mentioned, I'm not a cyber success story, but I have had the privilege of working with more than 73 entrepreneurial teams that did represent cybersecurity success stories. Those here in Israel include SafeEnd, Aladdin, and also FinJam. So what I'm going to try to do in my allotted time is give you some of that collective experience of 12 years, 73 cyber transactions, in terms of what does it take to be a cyber success story. So we're going to look at 4 areas. The first is the market backdrop, right? Because part of your success is going to be dependent on market psychology, investor enthusiasm for the space, as well as fundamental demand. We'll also look at some of the micro factors. What do you need to do as individual entrepreneurs with your teams to achieve success? We'll look at some of the common pitfalls, so things to be wary of. And finally, we'll talk about a couple of comps, as we like to say in investment banking, or some cyber success stories that we've had the privilege of participating in. So let's take a quick look at the market. I think as everybody here in the hotbed of innovation in cyber Israel recognize, this is a very active and growing capital markets environment. The top chart shows you the number of security M&A deals over the last 5 years. And you can see that in 2014, we hit almost 200 transactions. These are reported transactions. And in the first quarter of this year alone, we're at 73. So there is an uninitiated appetite on the part of global acquirers for security DNA. Not just security companies, but digital companies, telecommunications carriers, MSPs, software companies. Everybody needs security DNA. And investors are only too happy to foster the growth of that DNA. And we've seen almost 200 security transactions in 2014. These are financing rounds from early stage to late stage, and 40 in Q1 of 2015 alone. So I look to collect the dollars that have gone into cyber investments in the trailing 12 months. So this is the cumulative amount of reported investment. So just reported, and as everyone here knows, a lot of times there'll be a gap between when funds get raised and when they get reported. But this is in the 12 months ended March of 2015. If you'll add that up quickly, it amounts to about $2.75 billion. That's of a total of $7.2 billion over the last 5 years. $1 billion to cloud, almost $500 million to network and data, $300 to identity management. And you can see some of the active investors here. There is an unprecedented amount of capital going into the cyberspace. So that may beg a question. Is the market overheated? Is it frothy? So in the chart on the upper left, we heard from CyberArk when they were founded in 1999 that they were at the peak of the NASDAQ bubble. At the peak of the NASDAQ bubble, the NASDAQ trailing 12-month revenue multiple was 8 times. If you look on the left side, or the right side, you'll see the average of the recent security IPOs. And if you look at the peak, that was about December of last year, when FireEye bought Mandiant, and I think was trading at about, $80. And so you'll see that those revenue multiples are equivalent to the peak of the NASDAQ. So I look for some other signs. Many know that the RSA trade show in San Francisco each year is the industry's largest conference. In 2009, if you click online and go to the exhibitors and count them, you'll find there were 53 exhibiting companies in 2009. Now, I picked 2009 because you all may recall that in 2008 there was a bit of a global financial meltdown. And so most of the companies exhibiting in 2009 actually weren't really calling themselves security companies. You may recall they were all compliance companies back then, because that's where the budget dollars were. So that was a low. But this past year, 501. And those of you that were on the floor now recognize that RSA includes the North, South, and West Moscone, right? Back in 2009, they fit into one hall. And there were, companies who had raised Series A dollars of 30 to 50 million, with boosts the size of vendors, who had 10 or 15 or even 50 times their revenues, because in many cases, they didn't have revenues. Last corner are our unicorns. So as everyone knows, a unicorn is a private company that achieves $1 billion valuation. Unicorns are also mythical creatures, right? So you don't necessarily know whether they will sustain that valuation at the end of the day. The newest one is Illumio, under 2 years old, $142 million raised, $1 billion plus valuation. So what does it take to be a cyber success story? Here's a couple of things that my experience over the last 12 years have gleaned. First, prioritize the mission. It is about what you're building. Solve the problem you set out to do. The rest will follow. Tackle the hard problems. Web security, DLP, insider threat, APT. Operationalize the solution. Right? You cannot expect to drop your new platform in an ecosystem filled with a workbench of security tools. You have to make it synergistic with those tools and operational. Match capital to milestones. Don't raise more than you need, and know what you're going to achieve with the capital that you raise. And then choose your advisors and mind your mentors well. They are the source of relationships, customers, and experience. What not to do? Recognize that capital is a means to an end, not an end to itself. Just as CyberArk said, you don't celebrate the IPO, you don't celebrate the 30 or $50 million round. You utilize that capital and celebrate the milestones that you achieve with it. And then recognize valuation only matters when it becomes cash, right? Those billion-dollar unicorns are just that, right? Until somebody buys them or they go public and they realize that return, it's a meaningless number. Marquee pilot customers, those banks and government agencies who will try one of anything, they're great, except a lot of that stuff ends up as shelfware. What you need are real customers that will really deploy your product in scale. And then lastly, comparisons are odious. And what I mean by that is just because the company that your cohort in 8200 founded that had no revenue and got sold for 200 million doesn't mean that your company is worth 200 million. You may have as good or better technology, but you know what? Life's not fair. It's worth what somebody is willing to pay you at the time, that an offer comes. So lastly, a couple of the success stories. I just wanted to show how a number of these companies have used capital wisely. Good one is Mandia. Mandia Professional Services Incident Response Organization. We helped them raise $70 million in 2001 at a $145 million valuation. KP came in, as did One Equity Partners, helped to advise and grow the company. They sold 2.7 years later at twice the multiple, and as everybody knows, $1 billion exit. So concluding thoughts, cyber threats are endemic. Industry leadership is clearly in flux. There is a tremendous opportunity to jump to the top. Demand for effective countermeasures is high and rising. Capital availability is unprecedented. Valuations are high. And cyber talent is scarce. So it is a great time to be a cyber entrepreneur.
Thank you very much, Maria. Before you go, I would like to ask you a question. We heard about great advices for general cybersecurity startups. Do you have any particular advice for Israeli startups?
Yeah, I love Israeli startups, and I'm privileged to be here, and thank you for inviting me. What I love about Israeli startups is, first of all, you're pragmatic. You're pragmatic in your approach, energetic in your execution. And so my advice would be, number one, don't lose that. The second thing I would say is think globally. But think globally not only in terms of customers, but also in terms of capital and in terms of contacts, business development contacts. We've heard a lot today about the ecosystem, right? And it's very important to leverage that ecosystem on your behalf. Whether it's finding go-to-market partners, technology partners, or ultimate acquirers, you should be getting that vision of who you are and your value add out early. And then the last piece I'd say is, don't sell out early, right? There's opportunities to build great new leaders out there, platform companies that can deliver in this next generation of technology, what the protective and preventive technology companies did in the first generation. And I think there's some in this room. So I'd say use your capital wisely, grow globally, but build that outcome that's sustainable. And I'd rather see you as a source of cash buying the companies that I'm selling than selling you early.
I couldn't agree more with everything that you said. So thank you.